Tesla, my Esla, it's the big day. Tesla earnings are out. Here today in this one, folks, I am about to take you through hopefully one of the most comprehensive looks at Tesla in this video. We're going to go over the numbers. I'm going to show you some very important things that Tesla just announced that I'm seeing most people completely miss. And these things are game changers for Tesla over the next, not just, next few quarters, but really over the next few years. And I want to show you what's going on here and give you hopefully a very in-depth look at these earnings overall as somebody that's been an investor of the stock for many, many years and followed this company for such a long time. So hope you guys get a lot of value out of today's video. It's going to be a very in-depth one. Going to also share my perspectives on, Tesla stock. What do I think is going to happen with Tesla stock now? Do I think it's going to bounce back? Do I think it's going to keep going down? What am I personally looking at with Tesla stock and all those sorts of things? So very in-depth video. I appreciate everybody joining me. Thanks for being subscribed. If you enjoy this channel, you want to support the content, do so on Patreon. That will be the pinned comment down there if you want to support the channel on there, okay? Now, before we get into the numbers and all the nitty-gritty, I show you some very important things that are happening here with Tesla. I just want to, because I know sometimes somebody might see a video like this and they don't know kind of my history with this stock and all those sorts of things. This is a company I've tracked since like 2011. And I still remember going into a Tesla store. This is like 2011, maybe 2012 or so. And actually seeing a Model S in there. But it wasn't the full Model S. They only had the bottom part of a Model S actually in a Tesla store. It was fascinating to see that, and just like that really captured my imagination with this company. But I didn't own it for the longest time in terms of stock. I started buying in around 2018, 2019, and by that time they had already shown off Model 3. It was clear to me that EVs were the future, electric vehicles, and it was clear to me that Tesla was going to be the leader in this market. And it was clear to me that Elon Musk was a real deal Holyfield by this point in time, okay? And so I invested in it, obviously made incredible amounts of money. It was a life-changing stock for me. I did sell out of the majority of the stock back in 21, 22 when the valuation was going insane. I mean, it reached over $1 trillion market cap. And not because I don't believe in Tesla or something like that. Believe me, if I wouldn't believed in the stock, I would have sold every share in sight, right? And said, peace out of this one. The main reason is, okay, I got to show you this. Tesla can be a bit of a cyclical company. At the end of the day, they sell very high-priced products that most people have to take out loans. And it was of my belief that anything that you sold that was higher ticket, this means homes, furniture, cars, anything like that, right? Luxury goods were going to be down for several years, okay? Not months, not quarters, several years. And if you look at Tesla and you look at its history, this is a stock that had an incredible run from 2011 to 2014. Then the stock did nothing for almost 6 years. From 2014 through the first half of 2019, the stock went nowhere. 2019 to 2021, it made this incredible run all the way up to, I think at the peak, it was like a $1.2 trillion market cap, right? And the valuation metrics got stretched way too much. And my belief was that anything high ticket was going to do bad for years to come. And it had nothing to do with Tesla and the way they run their business. It doesn't matter. It doesn't matter how good Tesla runs their business. The stock just was going to be down for at least a few years, right? And this is something I obviously talked about a million times, especially on our old show there, Double M, okay, Millennial Money, used to talk about it all the time back in the day. And so that's my history with the company. Currently, I have about $300,000 worth of shares or so, and I am interested in adding more shares, which is a very different mentality for me versus where I was at with this stock in kind of 21 and 22. Now I actually did buy shares so far this year. I actually bought shares here in 2023, and I'm looking to add a lot more shares, okay? So that just kind of gives my history personally on Tesla, and I used to cover the stock almost daily basis, and shout out to anybody who's been here since those days. I mean, back in 2018, 2019, it was people said I should rename the channel Tesla Education because I was just doing so many Tesla videos back in those days. But back then, it was me and one other guy. His name was Galileo Russell. He was at a channel called Hyperchange, and we were the only guys back then. Now it's incredible. The Tesla community is so many. I saw how many channels were covering the Tesla earnings live when it came out, and it's cool to see, man. It's cool to see, okay? Different time period. All right. So first thing I just want to go through is the raw base level numbers here, okay? If I have it circled red, that means I'm not impressed by the numbers. If I have it circled green, it means I am impressed by the numbers. And if I have it circled yellow, it's kind of kind of what I was expecting, somewhere in there. Not very impressive, but not at the end of the world, okay? So in terms of automotive revenues, up 18% year over year, any other auto manufacturer, especially in this market right now, that would be a great number. But for Tesla, 18% is just not very impressive, right? I know Elon wouldn't be very impressed with that number. I'm not impressed with that number. I don't think anybody is, okay? As far as energy generation and storage revenue, up 148% year over year. That's incredibly great. Services and other revenue up 44% year over year. That is incredibly great. Total revenues up 24%. Okay, meh. Okay, total gross profit down 17% year over year, not what we want to see. Total gap growth, and we'll go into that more in depth in why that's happening, what Elon's up to here, his master plan and everything like that, okay? Total gap gross margin was down about, almost 1,000 basis points there, which is a pretty significant number. Operating expenses, down 1%, so I give that a green. Income from operations down 26%, not what we want to see. Operating margin down 779 basis points, not what we want to see. Adjusted EBITDA down 15%. Adjusted EBITDA margin down 849 basis points. Net income on a GAAP basis down 24%. On a non-GAAP basis down 22%, not what we want to see. EPS down roughly the same, right? Net cash provided by operating activities down 37%. CapEx up 17%. Meh, that's kind of what we expected. Here's the really bad number. Okay, this is probably the worst. If you want to see the worst number of the bunch, this is the worst number of Tesla overall in these earnings. It is free cash flow. Free cash flow was down a whopping 80% year over year. 80%. Okay, not what we want to see. As far as cash and cash equivalents year over year, we're up about 24% there, okay? Obviously, a lot more red in this quarter, in the short term here, than green. It's pretty clear in terms of that, right? Very important things mentioned here, and this starts to give you a little glimpse into what Elon Musk is up to here and his thoughts, okay? In the current macroeconomic environment, we see this year as a unique opportunity. See that word? Opportunity for Tesla. As many car makers are working through challenges with unit economics of their EV programs, we aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy, and vehicle software, remaining on track with our growth investments. What this paragraph tells me is you don't want to compete with Elon Musk, okay? This man is going for the jugular. He recognizes right now we're in a much weaker macroeconomic landscape, right? Much weaker. And he realizes that his competitors are not in the best place right now because the whole market is starting to shift to EVs in a time period when autos aren't super strong right now because big ticket purchase items just aren't strong right now, right? And this is I want to say almost a worst case scenario for the traditional, let's call it automakers who are trying to shift to EV programs. And so between the macroeconomic landscape being the way it is right now and Elon putting his foot on their neck, this is vicious. And Elon Musk, he has a reputation of being, I know people have different reputations to Elon Musk, okay? But I think there's a reputation that, this man is just, all about the environment and all those things. And sure, he is. But you got to understand, Elon Musk is also a ruthless businessman, okay? You don't become the richest person in the world or one of the richest people in the world without being a ruthless business person. And impossible to compete with. And this man is impossible to compete with. He could easily have Tesla just focus on margins right now and keep pricing of vehicles the way they are. But he recognizes that he can take more money out of the competitors' pockets right now and continue to transition more and more folks to EVs versus ICE vehicles, right? And build Tesla's brand bigger and bigger and bigger. So it gives you a little glimpse into Elon Musk, okay? And I'm just telling you, Elon Musk is you don't want to compete with Elon Musk. That's all I'm going to say about that, okay? Our near-term pricing strategy considers a long-term view on per-vehicle profitability, given the potential lifetime value of a Tesla vehicle through, obviously, all the different services and softwares and stuff they can sell you over time. And this, once again, gives you a glimpse into what Elon Musk's master plan is here when it comes to Tesla's business model. It's really about getting people onto Tesla insurance, like selling more and more Tesla so Tesla insurance continues to take off, right? And then hopefully they can sell you like the $12 a month premium connectivity like I have, or it's 12, I don't know if it's $10, $12, $15 a month, right? Hopefully you'll be able to sell you $199 a month in terms of the self-driving software, right? And many other various products and services, supercharging, obviously getting your vehicle fixed, all these things, right? The lifetime value for Tesla of more and more Teslas being on the road is an incredible number, right? Think about that for a moment. we expect that our product pricing will continue to evolve upwards or downwards, depending upon a number of factors, right? And we know that when demand's crazy for Tesla, right, in terms of, just like people have a lot of money in big ticket purchase items or in trend again, which we don't know. At some point in time, big ticket purchase items will come back. I don't know if that's 2024 or 2025, but I wouldn't be surprised at all when big ticket purchase items are back in full swing again. Home sales, auto sales, furniture, all that stuff. When that happens, I can tell you, expect Tesla, if anything, to likely raise price and in that market potentially take some margin there. Although we implemented price reductions on many vehicle models across regions in the first quarter, our operating margins reduced at a manageable rate. We expect ongoing cost reductions of our vehicles. This is extremely important here, okay? Including improved production efficiency at our newest factories and lower logistic costs. And it remained focused on operating leverage as we scale. And this is something that's missed, I think, a lot of times. When Tesla opens up a new Gigafactory, they do it far more efficiently and far more intelligent than they did the previous ones. This is a company that keeps the pedal to the metal. They're always learning. They're always focused on getting to the next level, right? And this is what they do. We are rapidly growing energy storage production capacity at the mega factory, and we recently announced a new mega factory in Shanghai. We covered that, I think, on my reaction channel maybe, what was that, a week ago or so? We also continue to execute on our product roadmap, including Cybertruck, our next generation vehicle platform. Our balance sheet and net income enable us to continue to make these capital expenditures in line with future growth. In this environment, we believe it makes sense to push forward to ensure we lay a proper foundation as the best possible future, right? And if you think about traditional auto, okay? If you think about traditional auto, these folks are very debt-ridden, okay? I mean, you look at almost every one of the major auto manufacturers, right? Tesla's competition, if we want to call them that. I mean, those companies are very, very debt heavy right now. And we're in a time period where it's not a great time period to be very debt heavy, where Tesla's not very debt heavy at all, okay? And if you think about these auto manufacturers, imagine them trying to go to big banks and saying, hey, we need another $1 billion or $5 billion, $10 billion to invest to try to beat Tesla, right, and try to fight them in EVs. And imagine you're the one that's thinking of considering loaning money to these companies, and you're looking and you're like, well, are you going to make money on these cars? And they're like, well, we hope to. We're not making. We're actually losing money on these vehicles right now, and this is actually losing us a fortune right now. But we hope to make money. Oh boy, okay. And in this environment, oh, good luck getting that money. Okay, and so that's just something I think to factor in there. It's a tough environment to have pipe dreams. That's all I'm going to say about that, and try to say we're going to compete with Big Dog, which Big Dog is Tesla, again, in their own game. How are you going to do that? How are you going to pass up their technology, their cost advantages, their scale? What? Like how are we going to do that? It would have been like Tesla saying we're going to try to compete with General Motors and internal combustion engines. I mean, you could try to do that, but good luck. That's a tough thing. We're going to try to compete with Toyota at internal combustion engines. Good luck. That's all I can say about that. Good luck, okay? Operations Cybertruck factory tooling is on track. I got some pictures to show you guys in this video as well, producing alpha versions. The Model Y was the best-selling vehicle in Europe in Q1. Exciting. Model Y was the best-selling vehicle in the United States in Q1, if you exclude pickups, right? Boom, boom, boom. And think about this for a moment. Tesla could easily just be fine with that. They just dropped price on Model Y again. I mean, you're already the best selling, but that's Elon. That's Tesla. They're not satisfied. They want to sell every vehicle, man. They're not going to be satisfied until they sell every dang vehicle. It's incredible. And they got the margins to support it to be able to do it. Whereas other auto manufacturers, they can't do that type of stuff, right? Now, S and X production up 37% year over year. As far as 3 and Y production, up 45% year over year. Total production up 44%, right? Total deliveries up 36%. But obviously, we saw automotive revenues were up, 18% or so, which clearly shows you that if you're going to sell, let's call it to more the middle class, you're not going to get as many upgrades, which is also going to hurt average selling price, right? Because average selling price is hurt because Tesla obviously dropped prices, but it's also hurt because maybe people aren't going to do as many upgrades if they're more price sensitive, right? Which makes sense. They're not going to get the bigger premium rims and not going to get this and get that, right? Like somebody that might be at a higher income level might get. And so that's just something to kind of keep in mind there, right? As far as inventory, days of supply up 400%. Sounds dramatic, but it's basically from 3 days, which is completely unhealthy. I mean, that's ridiculous. Like 3 days is just silly, okay? I think Tesla should have 10 to 15 days of supply. I think that's a normal range, okay? If they get up to 20, 30 days of supply for Tesla, that means they're just, ultimately demand's not that exciting at that particular time, okay? And so that's something to keep an eye on, especially over this remainder of this year, right? Solar deployed up 40% year over year. Storage deployed up 360% year over year. Tesla locations up 27%. Mobile service fleet up 23%. They need to continue to add to this. Obviously, if you're talking about more and more vehicles out there, you're going to have to continue to add more and more service fleet, more and more locations, more and more superchargers, right? Supercharger stations up 33%. Supercharger connectors up 34%. That's what you got to do, okay? You got to continue to spend and, grow so folks can get their cars fixed if anything goes wrong with them in a quick amount of time, or they can supercharge in a quick amount of time, right? Now, vehicle capacity. When we kind of zoom in on this chart here, as far as the California Fremont, right? S and X, they can do about 100,000 capacity in terms of S and X. 3 and Y, they can do about 550 out of that Fremont facility. Shanghai, they can do like 750,000, maybe even a little over 750,000 vehicles of 3 and Y out of Shanghai. Incredible number. I mean, it just seems like the number's gotten pushed and pushed over the years. Who knows? I wouldn't be surprised if it's over 1 million at some point. Berlin, as far as Model Y, they can do about 350,000-ish, maybe a little more than that. We'll see. As far as Texas, they're going to be able to do 250-ish out of Texas for Model Y, maybe more long term, right? And then Cybertruck, we'll see what happens with that. It's not obviously ready to rock and roll quite yet, right? This was important. Equipment installation for Cybertruck production at Gigafactory Texas continued in Q1 and remains on track. That's great news. As far as Shanghai goes, Giga Shanghai remains our main export hub, they say, right? And obviously, I think, if that's going to be always the factory that's always going to produce the best margin vehicles for Tesla. And so that always makes the most sense to be the export hub out of Shanghai, okay? And obviously, Berlin continues to just ramp and scale as far as the Berlin Gigafactory there. Now, this is extremely important. I think this was missed by a lot of folks, and you can't miss this, okay? This is the Model 3 cost normalized over time, right? And basically from when they launched in 2018 and really got that rolling to now, they've been able to bring costs down by about 30%. 30% decline. Now think about even in this insane inflation environment, the craziest inflation we've gone through in obviously many, many decades, to be able to achieve something like that in this environment's incredible. And so the important thing, why this is so important, is when you go to see Cybertruck, and whatever margin Cybertruck's going to produce, just understand this, they're likely going to be able to make those Cybertrucks with better and better and better margins next year, the year after, the year after. And they're going to continue to probably find cost savings in ways to make Model 3s, Model Ys, cheaper and cheaper. And if you think about the Model 2 opportunity or whatever, that $25,000 or under $30,000 car that, maybe can be the one for the mass autopilot program over time, right? In terms of the robotaxi network and whatnot. Like Tesla's been practicing for this. Like I almost view like the 3, the Y, the X, the S, I almost feel like it's all practice for whatever that vehicle is down the road. And a lot of people thought Model 3 was the iPhone moment for Tesla. But what if that actually isn't the iPhone moment? The iPhone moment might be if they can ever produce a vehicle that's under $30,000, because then it's just ridiculous at that point, okay? I mean, that vehicle alone would be, 5 million production a year or something like that if they could eventually do that. 3 million, 5 million, easy at that point in time, right? Battery powertrain manufacturing. Our cost journey is nowhere near finished, right? And they mention right here, producing electric vehicles profitably is a challenging endeavor, as every single auto manufacturer out there is finding out now. Oh boy, this is a lot more challenging than we thought it was going to be. Or maybe they knew that, and that's why they lagged so much and they haven't taken EVs serious until the last couple of years, right? Our cost journey is nowhere near finished, which is why we recently announced a transition to 48-volt architecture for vehicle electronics, starting with Cybertruck. Higher penetration of in-house design controllers, cheaper, more scalable drive units, and further innovations in the manufacturing process. Cost reductions remain the main enabler of delivering our mission. And this just goes to show you, Tesla is not satisfied for a second. I mean, literally, they'll bring down costs, and then they're right back to the drawing board and saying, well, how can we bring down costs more? It's incredible, right? That's why I love being a shareholder of this company, because they always are just trying to figure these sorts of things out, right? Now, in terms of energy storage deployment, I thought there was something very interesting that happened here, okay? So one is record number, obviously, that's incredible. This is phenomenal to see. But the interesting part is, this was in Q1, but you look at past Q1s, and Q1's usually one of the weakest quarters, if not the weakest quarter of the entire year for the company. So if Q1 is here, where's Q2, Q3, Q4 going to be? That's what I'm trying to figure out, right? Because this is usually their weak quarter historically. So that's interesting, and that opportunity is so massive, and I think more and more folks are waking up to how big that opportunity is, including even myself, in seeing obviously the fact they're going to build an entire facility in Shanghai, China, just for this opportunity, right? It's incredible. Now, this is important. Services and other gross margin is gone from a place where it was literally negative to now it is positive about 7% or so, right? I don't think it's out of the realm of possibility to imagine long-term services and other gross margins are going to be 20, 30%. I mean, with this business, I don't even think we're close to the final numbers. I mean, not even remotely close. I think this is, I got 5-10 years of runway of expansion until we're in the 20 to 30% range. And so that's kind of my opinion on that. I'm like, geez, that has so far to go. I think that's going to be a fun chart to watch over the next, I would say, 5 years or so. That's all I'll say about that. It's going to be very fun. Now, in terms of outlook here, we are planning to grow production as quickly as possible in alignment with our 50% CAGR target. We began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending upon a number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million cars for the year, right? No. Also, obviously, Cybertruck going into production likely this summer. You should see some on the road this fall. And maybe in your city, you might see a Cybertruck or two. Maybe you'll personally own a Cybertruck or two, okay? My fingers are crossed that by the time Cybertruck gets into, let's call it major scale, which is going to be 2024, let's hope that rates are lower by that particular time. Because if that's the situation, then I think Cybertruck can really take off in a massive, massive way right out the gates. So that's my hope in regards to that. We'll see what happens. But, obviously, if we talk about inflation coming down over this next 3 to 6 months, then that puts the Fed definitely in a position where this fall they can consider cutting rates. If we can get CPI in the 3s and maybe even in the 2s at some point this year, and especially if Fed funds rates are still at 5% at that time, that's when, you can see definitely a big reversion in terms of, just overall rates out there, which, let's be honest, most people buy Teslas and almost every auto on a loan, okay? Now, what is that vehicle you're looking at there? That is a Cybertruck that is in production there, right? So right now, they're just doing kind of like test runs of a Cybertruck and just trying to figure out best practices here, trying to iron out all these different details and whatnot of Cybertruck, right? This is another look at the tooling for Cybertruck production line. I mean, to me, I think this is probably 1 to 2 months away from ready to be rocking and rolling, okay? I mean, if I look at past ones, Model 3, Model Y, because they showed these pictures for the past production lines as well. I'm like, I think we're within 1 to 2 months of getting ready to rock and roll here and actually getting some Cybertrucks off that line, right, to early customers. So we'll see what happens there, but I can tell you, it looks like they're getting pretty darn close, okay? And that's very, very exciting. They showed a picture here of Cybertruck doing winter testing, which is important because I can tell you the Cybertruck it's going to be viewed from customers as it's got to be tough, right? It's a truck. It's got to be able to weather the elements, hot, cold, everything, right? It's different than a Model 3. A Model 3, I don't think people expect that. But for a truck, they do expect that. And so they're putting it through all the different tests as we speak right now. It's great to see this. Gigafactory Texas, this is a 4680 cell production, which obviously Tesla's talked, so much about 4680 cells over this past year. It's been ridiculous, right? And just another one of those advantages Tesla has versus their competition of just figuring out how to make their vehicles better and more profitably than their competition, right? Now, this chart is the most telling about what Elon's up to here, in my opinion, okay? And this shows you Tesla's net income and adjusted EBITDA. First off, net income and adjusted EBITDA are still very healthy right now. Let's be clear about that. But basically, Elon Musk and the executive team, they're sacrificing this chart for this chart right now. Okay, they're sacrificing net income and adjusted EBITDA for vehicle deliveries right now. It's 100% what they're doing. And, this is a very similar strategy to another super rich man, okay? The king of this approach is Jeff Bezos. He always was a king of this approach about, our margins might get hit in the short term. We're going to sacrifice profitability, but we're going to scale and get to much bigger numbers, and we're going to be impossible to compete with. And Amazon has basically been impossible to compete with, right? And if you look at what Amazon's been able to do, this is 15 years ago what Amazon's market cap was. It was a $32 billion market cap. Amazon was 15 years ago, right? Today it's $1 trillion. It's actually 1 trillion plus. How did they get there? They got there two ways. On their e-commerce side of their business, they're impossible to compete with, and they sacrifice margins again and again and again and profitability in the short term to just be impossible to compete with, and they did it through Amazon Web Services. And then if you look at somebody like a Walmart, for instance, right? I mean, they could have killed off Amazon really if they wanted to. They had the money to do it, but Walmart chose to go the route of we're going to focus on profitability. E-com, we'll take that serious when it's really, really big already, right? And you can do that, but you're going to lose the game long term, right? But sometimes these executives, they just aren't thinking long term like that, right? Which is why the game changers are folks like Jeff Bezos, the folks like Elon Musk, the folks like Sam Walton back when Sam Walton was running Walmart. Sam Walton hasn't been running Walmart for decades, okay? He was a game changer. Sam Walton, the man who started Walmart, was a game changer. He was the Jeff Bezos of his day. He was the Elon Musk of his day. But, nowadays that company's just run by, suits. And look what's happened. $228 billion market cap in 15 years ago. It hasn't even doubled. Why Amazon's gone from a $32 billion market cap to over $1 trillion market cap. And it's on its way to becoming a $10 trillion market cap long term. And Walmart, I wouldn't be surprised if long term they become slowly extinct. To be honest, over the next 10, 20 years. Because Amazon's got such a big lead now. Amazon's already getting stuff to people within a day. I mean, I think there's definitely a possibility that you're going to be able to order something and within an hour, it's at your door. That's where Amazon's going. You think Walmart's going to be able to compete with that? Okay? So, in regards to this whole situation, right? I think this was important as well. This is revenue growth over time. This is year-over-year revenue growth, right? For Tesla. They're roughly in here, right? And this is on a trailing 12-month basis, right? And you look at, legacy auto is barely even clinging on. And we'll see what legacy auto does over this next quarter or two. I mean, it's possible that they actually go negative. I think they probably will go negative in terms of revenue growth here over this next, let's call it 12 months or so. I think they're probably going to go negative. And this shows you versus SP 500 on a trailing 12-month basis. It's clear, Tesla's massively outpacing. Operating margins. This shows you over time S&P 500 versus Tesla. And remember, Tesla's still early days to profitability, to operating margins, to gross margins. I mean, this was a company that just a few years ago, this wasn't even in the wheelhouse of them, right? It's incredible how much progress they made. Legacy autos at 8%-ish as far as operating margins go. Tesla's almost doubled that on a trailing 12-month basis. And don't be surprised at all if the auto industry in general goes more this way. In this environment with slower auto sales over this next year, and you got to try to compete with Tesla, price will become very important. And so don't be surprised, everybody talks about inflation. Don't be surprised if you see deflation. Yes, you heard me right. Deflation in autos over this next year. Because for the big auto manufacturers, they either have to make a decision. Try to sell vehicles for top dollar and move very slow volumes and continue to lose market share, or chase market share or try to maintain your market share and drop price, which is going to hurt your margins and your operating margins, right? What do you want to do? What do you want to do? I mean, I wouldn't be surprised if a lot of the automakers just continue to sacrifice sacrifice market share to Tesla, and Tesla just takes bigger and bigger and bigger market share, and they try to just, eke out profitability in the short term here, which is going to be the exact wrong strategy to do. No, if you look at Tesla's balance sheet here, it's incredible. As far as total current assets on the company, we're at about, 42, almost $43 billion in total current assets versus total current liabilities of about $27 billion there. As far as total assets, $86 billion, almost $87 billion in total assets versus $37 billion in total liabilities here. It's amazing. Tesla's got a grade A balance sheet now. I would call this, if I had to grade it on a scale of 1 to 10, it would be a 9. This is a 9 balance sheet now at this point in time. And it's amazing because when I first started investing in the stock, it was about a C. It was a C grade balance sheet at that particular time. Now it's a 9 out of 10. It's an A grade balance sheet. Are there some balance sheets that are better out there? Sure. But I can tell you this is phenomenal. Don't even try to compare them versus traditional legacy auto. Oh my gosh, their balance sheet's a million times better than those companies. You can't even compare them, okay? So, next up here, let's talk about my overall views on the stock, my views on owning the stock, buying the stock, things like that. What I think is going to happen with the stock price and things like that, okay? So, short term, it's clear what's going on. Elon Musk is sacrificing margins, sacrificing short-term profitability for the long-term gain of, scale, market share, getting to millions and millions of vehicles sold per year, right? And obviously, he wants to grow services business, meaning things like Tesla insurance, premium connectivity, upgrades to your car if you want, faster acceleration, all that stuff, right? Autopilot, as far as self-driving software, right? All these various things. And many other products and services that fit in that services bucket that they haven't even launched yet, but they will launch over this next few years, right? That no one's talking about right now. And so it's very clear what he's doing here. So the short term, operating margins and gross margins aren't going to be exciting. They're just not. And so if you're in the stock just for the short-term margins and gross margins, operating margins, things like that, it's not going to be the most exciting time. I can tell you that. Because I think he's going to continue this entire year to just focus on scale, be impossible to compete with. But with that saying, I think Tesla's going to continue to take massive market share over this next, not just year, but several years. And I think he's going to build a Tesla that's impossible to compete with. Not just because they're tech, not just because they're supercharger network, not just because they're mobile service fleet where they come and fix your car in your garage instead of having to take it in and be super inconvenient like many others do out there, but because price-wise. You're not going to be able to compete with them price-wise. And so when I look at it, I mean, everything's on track long-term here. Short-term is not going to be exciting from net income side, from margin side. It's clear. But the long-term, everything's on track here. Now, in terms of stock price, right? I would love this stock price to get back to the $100, $150 range. I would love that, okay? And be a heavy buyer of the stock once again. I have my doubts about the stock going back there. And the reason being is in order to get the stock price back to that $100, $150 range, going to need longs to sell out of the stock. I'm not so convinced longs really are that worried, just to be honest. I think they're going to understand what Elon's up to here and what Tesla's up to, and that the long-term situation is still intact. So although I would love it to get back to those price ranges, I have a lot of doubts about it even going there, because I just don't think I don't think longs are really phased by this. It's a different shareholder base. And Amazon's always had the same shareholder base where they just are very unfazed by this short-term margins hits and things like that, right? So that's kind of my thought process in regards to that. So if anything, I'd be a buyer of Tesla rather than a seller of Tesla, as long as I have a long-term outlook in regards to this company, right? Everything's on track. So appreciate everybody joining me as always for this beast of a video, 33 minutes. Thanks for being here. Thanks for being subscribed. If you want to support my content and you want to support the channel, do so on Patreon. That will be the pinned comment down there. It's $10 if you want to support us on there. Also, we have a Discord chat if you're interested in that on the Patreon as well. If you're looking to apply to join my private stock group, the private wealth group, and get access to myself and all the other investors of Tesla, then that will be in the description area if you're interested in that. Appreciate y'all. Much love as always, and have a great day.